26 years in this business, 26 years in this automotive space, I've seen a lot of loans have went delinquent over the years where people couldn't pay because of job loss, income change, they got a divorce, a spouse died, or someone that actually added to their income. They didn't have the income anymore, so they ended up losing their car loan. But right now, auto loan delinquencies keep going up. And what do you do if you can't make your payment? So on this video, I'm going to talk about 3 ways of what you can do if you can't make your auto loan. But first, we're going to talk about a little bit of statistics. What's really going on now? Right now, the job market remains good, but the U.S. unemployment rate held steady at 3.7 in January of this year, January of 2025, and it also unchanged for December. But according to the U.S. Department of Labor's report on February 2nd, 2024, we have seen a 2-year trend where the national jobless rate has remained below 4%, the longest stretch in more than 50 years. According to the Labor Department, February's jobless numbers will be out March 8th. Now, right now, according to this video, what date it is, February 29th, but it may be sometime in March this year or next month or the month after. By the time you see this video, people are falling behind in their car payment. Younger borrowers are. Lower income work faces more difficulties making their car payments, indicating increased financial stress. According to the Federal Reserve Bank of New York, individuals that are younger, they're falling behind. And they're not thinking about things that they could do before they fall behind or when they get behind. Most people don't know what to do when they fall behind. They're looking at options. They're struggling. And that's the reason why I want to do this video, is because it's very important that you get proactive before you get behind on your car payment. But basically right now, inflation, not job losses, which means that everything's going up. Gas has gone up. Your water bill has gone up. Your electric bill has gone up. You know, I live in Michigan and our electric service is DTE. We call it Detroit Edison. You know, my bill was running about $60, $70 a month because I live in a condo. But now, over the past year, my light bill is running at about between $90 and $100. I know this because I had a conversation with DTE, Detroit Edison, and she gave me my overall for the year. She said, well, you know, it's based on an overall year. You know, it's just not based on the last couple months, but it just depends on the weather outside and blah, 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 and blah, blah, blah. And I'm like, really, lady? So really, she really couldn't tell me exactly when it goes. She just wanted to give me an average. So that's what she did. So inflation is not job losses, which is driving up the auto loan delinquency. All loan delinquencies continue to climb higher in the fourth quarter of last year, according to data from TransUnion. Information on Inside Powerhouse, the Atlanta risk loans payment patterns, remain best known for operating one of the 3 nationwide consumer credit reporting agencies. Now listen, some 1.6 borrowers were delinquent on their auto loan, defined as those were 60 days late. Now, you guys know 60 days is 2 months late on their payment. Now, in the fourth quarter, according to the financial distress that some consumers are facing, has not been in default on their auto loans and repossessions of cars or trucks. That's because he said the job picture is good. Remember, it's not the jobs, it's the inflation. Now, at the end of 2003, repos were up 29% from 2022, according to Cox Automotive. Now, Cox Automotive is they're a data research firm, right? They compile all the delinquencies on the cars, anything else that's good or bad happening in the automotive space. But repossessions are still 5% below compared to 2019 levels. Now, let's talk about the most stress in subprime borrowers. You know, I've been in this automobile space for 26 years. 80 to 90% of my customers have bruised credit. So which means that if you have bruised credit, bad credit, you're going to pay more for your auto loan. You're going to pay more than the person that has that 750 credit score. So if you're sitting on a 550 credit score and you're looking to buy a particular vehicle, you're going to pay more for that vehicle. Your interest rate is going to be higher because your credit score is lower, because you're high risk. That particular lender that's going to lend you the money on the car they probably are saying, well, you're probably not going to make your payment anyway. So they want to get the most from you at that particular time while you're going to make your payment. And I hate to say that, but this is what they're thinking. This is why they make you pay more to borrow your money, right? To borrow money from them so that they can get their money. Now, someone with a 750 credit score, they are very low risk that they're going to default on their auto loan. But let me just go back to this article. The most stressed and among some subprime borrowers are those with lower credit scores. And among borrowers who took out used car loans for a few years when used car prices were at their peak. Now, at their peak means high. Now, after COVID, if anybody bought a car during COVID and after COVID, you know that you paid more for your auto loan than what you would have paid the year before COVID. Now, nobody in the world knew that COVID was going to come around, right? Nobody, right? Because this is the first time that COVID actually was a part of the whole entire United States. So remember, when we're all sitting at home, we either were sitting at home trying to collect unemployment because we weren't working, or we were trying to live off savings if you had savings in the bank, or we were spending less money. It's because we were at home. We were running up that light bill. Everything else was up. The gas was up. Your gas bill at your house was up. The light bill was up. Why? Because you were at home. Food started costing more. Why did food start costing more? It's because we're at home. So, in other words, subprime borrowers, you're going to pay more for anything you do. Even if you're buying a house, if your credit score is lower than the next person next door or somebody else's, you're going to pay more for it. But high interest rate and higher prices drove up car payments over the recent years. I've seen that. It's never been this high, and I've been in this space for 26 years. So, but now let's get into this. Let's get into the steps that you need to consider when it comes to if you're going to be delinquent on your car payment. Now, I want you to make sure you get your pen and paper, and at the same time you watch this video, and you need to make sure you subscribe to my channel, leave some comments, share this video with someone, because you might not need me right now, but someone else might need me. So this is very important that you take notes, because if it's not affecting you right now, it may be affecting your neighbor, your friend, your sister, your brother, maybe you in a year, So you want to get your pen and paper, but that's why this video will stay up on YouTube, because you can always go back to it and take notes. But the number one, the steps to consider if you can't make your car payment is to find extra cash. If you have that, if you work in your job, for some reason your hours change, your income change, then, think about second job. Think about tapping into that emergency fund. Do you get 401k at work? Can you borrow from that? Do you have 6 months or 3 months worth of an emergency fund that you can go to actually help make your car payment? So think about that. And also think about right now when I'm doing this video, it's February 29th, 2024. Think about, it's tax time. It's tax time. When did you file your taxes? Can you use your taxes in order to make your car payment? Because your income is less this month, or your income changed, maybe because of job loss. Maybe, like I said in the beginning of the video, was because someone passed away, where you guys put your income together, or maybe you went to a divorce. Find extra cash. But also think about tax. Or do you need to borrow some money? Do you need to borrow some extra cash so you get back on your feet? I don't mean going to the bank trying to borrow some money, but maybe you can borrow money from a family member, a friend. I just want to give you advice on borrowing money. If your car payment is $500 a month, you don't ask one person for $500. You pick 5 people. Again, if that car payment is $500 a month or $550, no, let's just leave it at $500. You ask 5 people for $100. Don't ask one person for $500. You ask 5 people. Why? It's because the chances of getting your car payment is way better than asking a person for $500. So think, car payment $500, you ask 5 people for $100 and get that car payment made. And then maybe that next month, if you're still in financial distress, maybe the next month, maybe you didn't got that part-time job that you needed to make up your income in order to make your car payment. The worst thing that you can do is not do anything. No communication. So Sometimes you know that you're not going to have the money to pay your car payment. You know you're not going to have your money to pay your Detroit Edison bill, your DTE bill, your light bill, your gas bill. You know that you're not going to have money to have gas in your car. So it's called planning ahead. Find some extra cash, guys. Number 2. Oh, let me bring this up. Good point here in this article. You know what has also gone up here? Now I'm in Michigan. I don't know what state you're in, but I'm in Michigan. But motor vehicle insurance premiums rose 20.6% in January over the year, according to Consumer Price Index data for January this year. That's the biggest spike on the long list of expenses. By contrast, food was up 2.6% a year over last year, and gas prices were down 6.4% on a 12-month basis. Now, this is important. We're paying less for gas, right? We're paying less for gas in our car, but guess what? We're paying more for insurance. It evens out. We put less money in our car, but our insurance prices are triple. Let's go on to number 2. You guys never want to do this, but you need to communicate. It's called picking up the phone. Hello, saying talk to your lender. Talk to your finance company. Have a conversation. Talk to your lender. Reach out to your lender as soon as possible to explore your options, particularly if you're facing a temporary hardship. Now, temporary means 30 days, 60 days, 90 days. We're not talking about a year. Temporary. Temporary is right now. So pick up the phone and say, hello. Now, this may feel intimidating, right? It's always intimidating when you gotta make a decision to let somebody know you can't pay them. The sooner you reach out, the more options you will have available. So one option you can have available is, let me just say this, lenders won't want your car. A lot of people, customers, which consumers are customers, they think that the lenders, the finance company wants your bank. Oh, they're waiting on me to stop making my payment. No, they don't. They don't want to pick up your car because they got to pay a repo company to come pick your car up. So they really don't want your car. But let me just tell you, one of the options that may help you is possible solution could include deferring your auto loan payment. That means that they can put your couple payments or your one payment that you're going to be behind, they can put that on the end of your loan. If they don't give you that option, you need to say, you know what? What about deferring auto loan payment temporarily or working up a new payment plan to temporarily reduce your payment? So say, you know what? Defer my auto loan, put those 2 payments on the back that I'm behind on. Put them on the back. And then once my financial situation will improve, I'll be able to catch my payments up. Or just want to put it on the back. That means if you're in a 60-month loan, it may be a 62-month loan. Or if you have 57 payments that you have, you're only in 3 months into your auto loan and you have made 3 payments, you have 57, right? 57, 58, 59, 60. They're going to add the 3 on the back. So you're going to pay for your vehicle 3 more months than what you would have originally paid. Or you say, no, what, can you work up a new payment plan because this is temporarily for me? Or they might just change your due date. Maybe you need to have your due date 10 days later or 2 weeks later than what your original payment is. So if you don't ask, you're not going to receive. Remember, the lender never knows what you're going through. That's why you have to communicate and never be ashamed. It's between you and your finance company, you and your lender. Now, number 3, if they say, consider selling that used vehicle. Remember, if you bought it brand new with no miles on it, then by the time you look to get rid of it, it's going to be used, right? If necessary, sell your car. I know that's very hard, right? It's very hard. But I always tell my customers, let me just give you a little bit of advice here, a little bit of advice from the queen. If that car payment is too high, get transportation before you let that car go back or before you get delinquent. I have customers that have had issues with their vehicle. Maybe the engine went or they didn't have any money to get the engine fixed or the transmission, or their vehicle was in an accident, it was totaled and it wasn't repairable, and they didn't have insurance on their vehicle, therefore they don't have a car to drive. But they've been making a car payment on time. I always tell them, figure out what kind of car you're going to get before you get delinquent. But if you're delinquent on your car loan, figure out getting another car before you go delinquent, or before you're going to know you're going to have issues. What you're going to do with the other car, I can't tell you that one, okay? But consider selling your used vehicle. Note that sometimes you might get more on your vehicle than what you think you're going to get on that vehicle. So consider selling your vehicle. But I always tell my customers, get another vehicle before you sell that vehicle. And maybe you can get more money for the vehicle than what you anticipated. But know this, if you have a lien on that vehicle, you can't sell that vehicle to a person and think they're going to be able to get a free and clear title, because all the liens have to be paid off on the car if you're going to transfer that car to someone else. Now, if that car is free and clear and you don't owe any money on the vehicle, guess what? You can sell that car with no problem without asking anybody. But if you have a loan on it, you got to be able to satisfy that loan on that car before you actually sell that car to someone else. Or you got to make sure the car is a zero balance on the loan, or they can assume your loan. They can buy the car from you. That's another way. Sell it. Or number 4, they can assume your loan, but they got to get approved for the loan, right? They got to be able to buy that loan. They got to be able to buy that car. So that's another way. Hope you enjoyed my video. If you're still here, watch this video, subscribe to my channel. This advice is critical for you, but it might not be critical for you because you might have been in a situation, but maybe it may be critical for someone you know. So subscribe, share this video.